God. Like I said before, so having explaining the validation of an uptrend and downtrend, and we use this as our low, and there was a break here. So definitely, can you now say that, like, I don't know, this thing always works like magic. Because now, see, this was the low, and we expected that if there wants to be a change in direction, the market, the part of the market has to break this low. You understand? So, but it actually came back here and used this other block here. This very beautiful other block. We've been waiting for then. If you remember that I was saying if I actually wanted to buy, I would have used this, you understand? Then came back. That's the essence of waiting. You will still get what you want to get. And used it. Then boom. You don't know how many pips this 2 hours can this 2 hours time frame. You know how many pips this is? Now, I want to get something right. I'm coming. I want to get something right. It's not equal. I wanted to say these are equal. Right? So now, that was much of our time. It came back and used this this Fibo. But fine, how to be sure again that is this exact Fibo that this thing is actually going to use. So now, what I will do basically is I will now come to a lower time frame again and analyze this place. And any opportunity I'll be looking for will be a selling opportunity. So definitely the thing should break maybe any chart pattern starts from here. It means that it's actually coming here, you understand, to retest this. And if it breaks the chart pattern very richly, it means that it's actually using this one to change the direction. And most time, it might be because of a news, a one-time news. Maybe there was a bad news about USD card or two bad news about USD card. You understand? That will just put it up to here to this point now. You understand? But now, probably maybe you missed that entry and you wanted to enter again. Yeah, two things you can actually use to enter. You can use the fair value gap entry and the other block entry. That is, you make sure that when the price of the market mitigates this last candlestick, say, you enter. You understand? But most time, I personally, I don't use it. You understand? I don't use it. I won't lie. What I do is I wait it comes to that other blocking because I believe in that other blocking so much. This thing, I wait until it comes to this other block, and if it doesn't come to the other block, that is one wahala. But the fact that now I have two equal, are they equal? Should I say equal? Yeah, equal are not really equal this case again. So I'll just call this equal. I'll call this equal. Yeah, just a little bit slanted together. I'll just call them equal. I'll call this two. Hello? Okay. So now, like I was saying, sorry for the break in translation. So
Okay.
came back to you know there was a time I was talking about okay we should wait for a buy entry using this bearish order block and bearish order block. Yeah, we said that and we saw that it didn't actually mitigate it, but we have peace of mind. You understand? Now it came back later in the future to mitigate that block, and boom, how many pips still went up. So we're the last class we're actually talking about the last video rather where we're actually going to take our sell entry either year or year. You understand? So many things can actually be a factor. You understand? That could make it to enter to go for a bad sell. Like because now to me, this is a fundamental sell. It's not a pay selling normally something. It's the fundamental market that actually pushed, which is the news. You understand? That's why I was actually hoping that if this can actually show us, I'm coming. If this can actually
Yeah, I think
if this can actually show us
it was
not
on a Monday.
it was not even still showing. It's not even still showing yet. It will be a news around that time that pulled it back. You understand? That pulled it very well. And yeah, it's made use of this. I don't know why. There's a candlestick up here and it's not really showing. But I want to analyze that candlestick very well. There should be a green candlestick up here like this. I don't know why it's not showing. Let me delete this. Let me delete it. Fine. Can you see it? If you analyze this thing now, there might be another block that was left behind it, that this was what this thing came to mitigate around this place.
Okay.
Then boom, it sold. Now, probably you forgot again to enter around this particular place again. You'll be scared normally to enter around there. You understand? But obviously, there will be some pullbacks that would have actually wanted you to enter, but probably you are scared. You missed the news because someone like me, if I'm not taking the, like, anything that stopped me or that didn't allow me to take the news around from this place or this place, I won't take that news if I'm late. I rather just be in that pain, be angry at myself. That, okay, why did I do that? They are making me entering here and seeing some little pullbacks. No, I don't like that. Now, someone you actually be expecting that, okay, fine, you put your you enter here again. But see now, it just balanced the market with the last candlestick and it was selling. You understand? So someone like me, actually, people use, or let me say, you can actually use it actually. That is, when you actually want to place your new entry, that is, the custom OT. I don't know if you actually heard about OT.
Yeah.
Ultimate prime entry. That is, you check your discounted price and your premium price. You understand? So now this is the idea is the low. So you'll be using that ratio of 50. Anything that makes you to enter the market from 50 to 0, you're entering it at a premium price. But if the market retraces from 50 to this one, which is 100, you have higher chance of placing your sale around that particular zone from this 50 to 100 because you are selling at a discounted price. You understand? But discount save past discount because if you sell from me and the market is actually still coming here, you are still selling at discounted price, but that loss from year to year save is not actually small. 2 hours. You understand what I'm trying to say? That's why me personally, even knowing there's a difference between you knowing the loss and you picking out the ones you actually want to work with there. Do you understand what I'm trying to say?
Yeah.
There's laws that if you don't work, you will not have money. You understand? But still, there are still various of work you can actually do. There are ones that you will do that will halt you before you make the money. There are some that you can actually sit at home and you make your money. It depends on what each one you want to choose. So these are how forensics. You know all the laws. Now you will not be the one to choose the one you want. I personally, I don't do this. I don't make when that the fact that the market actually now feel that fair value gap. You understand? That I will not say no. I always make of the ones that probably the market will feel it. And at the same time, that last candlestick will be very, very close to the other block. And coincidentally, or we use the opportunity to do the two things at the same time, feel the fair value gap and what mitigates the other block. And something like that I'm actually talking about is something similar to, let's look for something around there. Something similar to, should I use this? No, let us use this. Let me use that last one. This one we actually talked about. Something similar to this one now. If you see, you can see the fair value gap. See the fair value gap from year to year. You understand? Yeah. The other block here. You understand? So definitely we are expecting the market to if the market wants to fill the gap, is to fill this last high here, this first high here. But it's still close to the other block. You understand? So I always believe that it's actually the market will just use the opportunity to use one stone to kill two birds. It always happens. You understand? And that's only what I used to wait for my own forex journey. And it has always been profitable. Because it's even showing you that there will be a fucking pressure that will pull that market back or up. Because it's not just one thing that's pulling it back. Just two things. And sometimes if they're like this, that's what they call point of interest. You understand? The powerful point of interest. You understand? So now, me, basically, I'm waiting for you. This will be my first entry. The entry, probably because the market didn't actually come here again. That doesn't mean I'm not still going to see my entry here again for life. Now, I already said something. I spotted something like equal I here, because equal I's are not really equal these days again. But to me, I'll still call it equal I. That is, the market can actually use this opportunity to break these two equal I. And when it takes out this two equal I, it uses this one to take the liquidity to push it back. So now I'm scrapping this as my entry. I'm scrapping this as an entry because it's more or less like a favorable entry for me for a year. I don't know if you understand what I'm trying to say. Hello? See, this is another block here. This is another block. This is another block here. But the main reason why I don't want to use this other block here is that, you see, this is another block here. And the other block left what? We created a fair value gap. But I don't want to use it because there's liquidity above the other block. Do you understand? Now, going back to the psychological explanation I used about two other blocks that the market will actually take one, that you should always use the last other block. You understand? You see the same thing happening to here. Other block is just like the price of the market. They close their position and the price returned back to the initial position. You understand? So if the price of the market breaks it, the other block has fulfilled its mission. The mission of the other block has been fulfilled already. I don't know if you understand what I'm trying to say.
Okay.
You understand? But it has been fulfilled, but we still have liquidity upward. So it has to take the liquidity, fulfill the other block, fulfill the liquidity above of it. You understand? But if there's no liquidity above, it will use the other block alone to respect it. So now, I'm scrapping this as my entry of an other block because it has created and there's a buy stop liquidity above it. You understand? So I'm scrapping this as my sell as a new entry, but let me look for another entry again. As things goes, so now the validation of a how will I say it, of a lower trend now is forming lower high and lower low. Now there's something they call OTE. That's the optimal prime entry. What they used to call it. So now what is actually used for is just like OTE. Yeah. So what it's used for is just to enter in rallies, around rallies. You understand? Now we're actually going for a downtrend. Don't go against the trend. You're looking for a perfect time to sell. So now let's look at our FIBO. We always use the FIBO alongside with other blocks and some other things, probably fair value gap. In this case, you actually use fair value gap. Yeah, in this case, can use fair value gap. You are entering with rallies. So now, OTE is expected to happen around 50%. That is, you place your entry on 50%. 50% of the what? 50% of the FIBO retracement. So which means if I actually want to join my sell, I'm actually going to enter this 50%. And me looking at the 50%, does the 50% balance the imbalance in the market? Let's check. Let's see if it does. Okay, yeah, fine. See the imbalance around this low here and this high of the last third candlestick now, which is the space. Can you see the space between? Let me zoom it out. The space between the low of this candlestick and the high of the last candlestick, and the space in between of it. So now we see that the 50% Fibonacci retracement was a little bit inside of this candlestick, and the price of the market came there, and there was a what? There was a movement. Now you entered your sell here, you took your profit. Now let's assume that you didn't take it yet around this place. Let's do the same thing. Can you see again? Can you see the thing actually hits the ratio of 50% before coming down? Can you see?
Yeah.
There was a what? It started selling again. You could have actually entered your sell here. You understand? So now, let's look at here again. This is the 50. Well, this time around it chooses 60. And now let me now tell you the main reason why I choose that 60. That's why like you just have to like shine your eye very well. This is more or less like equation. Now, this was an I. This was an I. See what happened here. The psychology behind this thing is not like, I said price action is more or less like a repetition of what has actually happened in the past. Now, there are already two things already that actually happened consecutively in the past, which is the FIBO retracement, 50% retracement in the market, which occurred here and here. So definitely, psychologically, me as the market maker, I'll be thinking that, okay, fine, this retail trader, they will still expect, you understand? They don't just break the law. When they want to break the law, you will know it. You understand? Because you are a price action trader and you're also an SMC or ICT trader. Now, they will always give a sign. They will always create liquidity when they want to go against retail trader. But you as an ICT trader can only spot this if you know their moves. You understand? Now, the fact that they've done the 50% twice, you understand? There still has to be a retracement. You understand? Now, they created the two equal highs. And what happens when they are equal highs? Before the market moves, continues, that it has to break, it has to take that liquidity. Forget the fact that it's actually a small movement here. These 2 hours, these 2 hour candlestick. Can you see it?
Yeah.
Then they took out these 2 equal high here. And after taking it out, they continue. So this is something that normally you can actually spotted as a. So one thing about trading is this more of psychology. There's sometimes I'm actually analyzing markets because I actually belong to some other trading signal groups, and they'll be like, sell, good, sell good. And if I'm seeing another block or a fair value gap around that they are entering, I'm always happy. I don't know why. Not that I'm actually happy that they want to enter lots. You understand? But it always gives me like a kind of confirmation. Okay, fine. This is what the retail trader thinks that they want to sell. So I don't know. Like I always think as if I'm the market maker. I don't even think I'm the I want to make. I think that okay, fine. Like I want to go against people, because it's already getting to that. Because the more you try and think and trade like an analysis trader, the more you yourself you'll be like, no, well, I'm supposed to be the big guys. I don't want to sell around this place because this is when they want to sell. You know what I'm trying to say? But still, that means you are scrapping your price action. You have to know everything hand to hand. Put your psychology together. And trust me, bro. I was looking at you were saying, 50% loss. The loss is actually part of the game. There are sometimes that even in this forex market, in this forex trading, I've seen the news going bad for USD against the pair. And the fact that USD is going bad, it was supposed to be selling. USD was buying, and I was just laughing. There's another psychology behind that. You understand? There are some people there are set of people that when the economy, when the firm is actually going down, you understand? That's when they put their money. Now, that might actually sound a little bit of crazy, but that's the fact that how we be investing in a firm that wants to go down. That's because they've seen the future in that firm, and that firm needs money. And when there's money for them, they will rise. You understand? So if the company now say, okay, we'll be sacking like we'll be sacking like 300 members or 300 people in our firm today, that's a bad news for them. You understand? But there are still some investors that they still believe in that firm, that because of that bad news, that's when they will now invest their money inside that firm. You understand what I'm trying to say? So that thing is more or less like it happens to all these USD and everything too. You understand? The fact that Nigeria is actually a bad economy, every news we want to drop, will always be a bad news. But trust me, my brothers, different countries are investing in Nigeria now, putting investments in Nigeria now. So in the charts, Nigeria will be rising. But we are getting bad news. You understand? But it's rare before these things can actually happen. It's very, very, very rare. It's very, very rare. That's why you just have to you want to divert into fundamental analysis very well. There has to be someone that is watching news very well. Because you watching news, you would have actually added in the news today that some kind of group of companies are trying to invest, some kind of group of companies from China are trying to invest in the United States dollar index. You understand? You knowing that, okay, fine, some people want to invest in the United States dollar index, and yet they are dropping the bad news today. You know that, okay, fine, even though it's high impact news, it might not really affect like that. So you want to deal with fundamental analysis, you have to do something in the news. And a website I can actually recommend to that is this Boomerang. I don't know if you actually heard about that before. Like
No.
Eh?
Can you send me the link later?
Yeah, let me type it here. Boomerang or something. Okay, let me try and search for it. You will see they'll still be saying the news. You'll be checking the economic calendar and they'll be doing the news. They'll be giving you news highlights. Can you see Boomerang? For Kitty. US only. Wow. That's a lie. I'll still using it. Oh, sorry. I've already attached it to this DSTV channel. Sorry.
I'm just looking at
Yes, if you do this one. We go to auto correct. People should change this for me. Okay, Bloomberg. Whew. Can you see it's Bloomberg? It's not Boomerang. Yes, if you do that one. So this is what it actually looks like. Show you the economy. Even there's some news, economy news that they are not in forest factory or baby peeps or my FX book or that. But when you get to this Boomerang, they're actually going to show you that the news actually going is occurring. You understand? That's why sometimes you see that there's no news, but what is moving the markets is because that platform you're actually using sometimes they are not giving you enough of the news that's actually happening. You understand? Now look at now. This is telling us like today around 3:30. Oh my God. Now, are you not telling today is because today is Friday, you want to risk your life and trade USD because today is Friday. See, there's a news from how many news around 3:30 now? 1, 2, 3, 4. Let's even forget that this ones are actually impact. 1, 2, 3, 4, 5. Same time, 6. There are 6 news that want to happen around 3:30. Now you are a father of forex. Okay, you know how to trade very well. Now you know how to trade fundamental news. They will kill you because how many of them you want to predict? Now this movement of forex now, of this market now in the market, the effect that it will show is that more or less that it will be some effect like this: bam, 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 bam. Where do you want to enter? When do you want to leave the trade? Just wait, chill. You understand? And when the news is done, immediately when the news is done, maybe around like 10 minutes or 20 minutes after the news is done, what you just have to do then is just spot out some other blocks, spot out where the market actually left some liquidities, spot out Vieva Lucas, spot out equal eyes. You understand? Spot all those things out, and you start. That's when you now start making your own news by that time. Well, that's that about that. Let's continue about what we are saying now. So, are you seeing places where you can actually like be eating USD card now? Now,
Yeah.
what were we even looking for? We are still expecting a bearish movement to this particular point, too. So you know.
Yeah.
Yeah. So now, but we want to enter again because we're not giving the opportunity to enter around this place again. So now let's look for a perfect time to enter. We are not going against the bigger picture, which is that we are selling. So now we want to what? We want to sell. Now we say we want to sell. So we are looking for a good place to enter. This actually look a little bit kind of choppy in my eye. So that will lead us to what? A lower time frame. 30 minutes. Let's go. Now, leading us to 30 minutes, we've seen the equal eyes around this place, and we've seen what we chopped around this place too as well. So definitely for this stupid other block, I think this market came to use that. Came to this other stupid other rubbish other block around this place, left at a zone. Because the other block was left at a zone. This is a resistance, this is a support. You can see it very well. So the other block was left in a zone. Let me change the color. You notice the other block here was left in a zone. That was why it used it. Yes, anything that makes it fall back inside that zone, it means that it's going back. So anomaly, trading is sweet though. Anomaly, see. What do we have? We have a triangle, which is what a chart pattern. I think the price market was actually oscillating inside the price chart and inside the chart pattern for a breakout. So now, like we were saying, we're looking for a perfect time to enter this particular market now. Now, to me, easily, very easily, I can pick my entry to be around this place. You know why? Because these are fair value gaps and this is the last other block. Now let's try and Oh, God bless what we know. Now, I won't use it. Do you know why? See,
Why?
above it too. Fair value gap above it. So definitely the price of the market to what? To break above it and look for something around there to break it back. Very, very interesting. Now, what's actually going to happen here? Because we've actually predicted the market now. The market now lead us to examine this movement from year to year. Understand? So let us see if there are fair value gaps around here. You understand? Because now, if the market, now let me explain to you now. If the market tends to break this low now, sorry, this lower high now, it will be something like this. And which means that actually breaking the validation of this internal higher low. Now it's happened here. The reason we are not using here is because we're looking at this bigger picture. Remember when I was talking about a very strong, what's wrong with this thing? I was talking about a very strong, come on. Hey. Ah. Oh yeah, leave it. Come on. Now, do you know it's actually spoiled the validation? Understand? That's created a CHOCH here. So now what we're expecting now is, now let me tell you what we are now expecting. Is that the market will come like this. There's another equal low here. You understand? The market will come like this. We still know we are selling, no, but the market has to shake a lot of people out of the market. That means a lot of people are already selling with this thing. Will now come like this. Probably take something up here before it continue selling. Now, see our equal low here. So, but let me just assume you that you want actually now want to enter. I've actually told you where you put your entry now. We are talking about when to enter and when to put stop loss. Definitely, if I'm actually assuming this was not actually here. This was not here. And I put my entry here at the tip, the first tip of the other block, and my stop loss, because now there's something they call stop ons. You understand? Because they always think of the possible places that we, the retail traders, can actually put our stop loss. You understand? So they tend to put their stop loss. Normally, you're supposed to put it somewhere around there. You understand? But me, I always put it far, far away. You understand? But not too far. You understand? But far, far away from it. You understand? So now, if the market will come like this, break this, then don't forget, if it goes like this, then this will be another block too. If you leave this as another block, we'll still have equal lows. If you just break this, use to form equal low couch, use this one to form a new higher low, then break it. Then let's look for if you can actually find any point of interest around this place. Because I'm actually even saying now, of course, can you see the fair value gap? This market is left around this particular place now. See the fair value gap, the market left around this particular period. It might actually be where the market is actually interested to in going. You understand? So now if I actually want to enter now, I want to enter this market. First thing I will enter for the sale. Because psychologically, I'm not going against the trend. And psychologically, I know that what I'm actually doing, I'm taking my TP below this equal high. So now, let me switch to 15 minutes. This is actually like a signal for you, Mr. Eddie. Don't enter it. News will happen very soon. This is 1:35. You can still actually enter it. 3:30. That's the next 2 hours now. I mean 10 minutes in 2 hours. 1:20, 10 minutes. Still have time. 1:20 candlesticks. 1, 2, 3, 4, 5. Still have time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You don't have time. Okay? This one is just 7 candlesticks. Yeah, so in short, I'm just saying it's like now, looking very well at this thing now, I can say my market is actually going to come to this point because I can see fair value gaps around above this equal high So its interest, it will use this to balance the market here. See this tiny motherfucker order block here. So let me put at the tip of it. That is, the market is actually going to come to this point and use it to break these two equal low. Same thing we actually do for something around this particular place, but it's still far. It's far. Well, what we're actually going to use to judge is actually going to reach it very far. And I'm kind of a lazy person because this is actually a laptop, not a big screen. So just to be going back here, I hate it. You understand? So most time I just use my stop loss and buy stop. So can is already buying. Now let us say we predict the market to buy to this point here, in which it did not burn its daddy well, for not buying to that point. Now at the same time, we predict that market is actually going to sell. Let's put the very tight SL to this point.
Yeah, I have the analysis. I'm watching the case.
You said?
I said I like analyze that thing today, like this morning.
This
I'm
one, Abby.
anticipating that area. Yeah.
So that's it. So with that, we just extend that from here like this now, the market is actually selling.
Yeah.
Might not be down, but it's actually a good entry. You can actually swing it to it come to the place is still far. It's still far. It's cannot. Hey, it's still far. But the news will push it a little bit down, Shan. But it's still far. That's when it's still far. But we still have point of interest inside the zone. So that when it gets to this zone, then you now do the zone itself. So just as simple as that, it's very good. As simple as that. So when you're actually dealing with this ICT and other blocks of a thing, which are very, very important, so you already know where to put your SL like that. You understand? Understand the market using price action and ICT, and always use your entry model using ICT always. ICT always. You understand? Understand the market using price action and ICT. But when you actually want to enter the market, always use ICT entry models, which are the other block and the equal I and everything. You understand what I'm trying to say? So with that, it'll be very easy for you to know where you put your SL. Your SL has to be a little bit far away from the below or above the other block. And your entry must always be at the tip. Though sometimes it might actually be at the end of this or this other block that the market does not tend to change in direction. But most times when the market touch the tip of the OB like this, it starts changing. You understand? So now what actually wants to happen now is like when the market touch this tip now, it might tend to like do as if you want to reverse. So that a lot of people that they didn't cite something like this. You understand? You start placing their words. Sell. A lot of others sell. Then the next thing you just see boom. To now pick their SL around there. Because they want to put their SL around there. You understand? So that's the cost of this stop on. It's because you did not farabalẹ̀ analyze. It's still stop on. But everything is working together for themselves. You understand? It's still stop on, but it will use this equal I. Because there's liquidity here, then use this to push it back. I don't know if you feel what I'm saying.
Yeah.
I don't know if you actually learned one or two.
Yeah.
If not, I'm sorry for wasting your time. So now,
I'm asking you.
You said?
Are you hearing me? I'm asking you. I said I learned a lot.
Okay. So now, this is what you cannot just put. Let's forget about what people put. They put BOS, they put. Sometimes you don't even need to put everything, label your. See, there's even a secret. If you download Trading View, you go to Trading View, download Trading View on your laptop. When you get on your laptop, go to indicators around here. Click on indicators. When you get to indicators here, click on Smart Money Concept Indicator. It's like all these level look at, it will be bringing it out for you. Equal lows, equal highs, will be bringing it out for you by himself. You understand? But that still doesn't help you. Understand? That doesn't really still help you. You understand? What really help you is your psychological thinking about everything. You understand? So now the market will buy to this place. You already know it. But probably if you assuming we bought from here, we'll put this place our TP1, TP2, TP3. Forget how close maybe the pips are. TP is TP. Pips are pips. 10 pips, 5 pips are pips. They are not just pips to you because that you are knocking it with a lower lot size and you are using low equity. Banks sometimes don't even go up to like 3 pips and they are gone and they make millions of money from those 3 pips. So can you see it's already going? Let's switch to a lower time frame, like 5 minutes. 5 minutes my G. Now, so normally let's put our stop loss somewhere around here. Let me shift this up here. Simple as that. So we bought for somewhere around here and taking our TP here. And we hope that when the price of the market hits space, we sell too. Just as simple as that. I'm running low on my battery. So that's it, Mr. ID. So I'm actually recording the class. So in case you want to watch it, so I'll send you the link. So thank you very much, sir. Yes, sir. Bye, sir.
Okay, sir.
Yes, sir.
Thank you very much.